Good afternoon, ladies and gentlemen. A very warm welcome to all of you on this very important and pertinent post-budget interactive session with senior officials of the Ministry of Finance. In the inaugural session, we have with us today Shri Sanjay Malhotra, Honorable Revenue Secretary, Shri Ravi Agarwal, Chairman CBDT, Shri Sanjay Agarwal, Chairman CBIC, and we are waiting for Shri Rajiv Memani, President Designate CII, who will join us in due course, and of course Shri Chandujit Banerjee, Director General CII. May I now request CB to formally welcome the guests and the audience with his remarks, please.
The reception and the welcome to this great team, which is the main team behind the union budget, which was presented just a few days back, was quite spontaneous from the audience here. So it's a pleasure and honor to once again welcome the Secretary, Department of Revenue, Shri Sanjay Malhotra ji, the Chairman of our CBDT, Ravi Agarwal ji, and the Chairman of the CBIC, Mr. Sanjay Agarwal. What a great pleasure to have this crack team of the union budget over here with us for an interactive session, and the Revenue Secretary was pretty clear just before that he was wanting a two-way conversation. So once again, our heartiest congratulations, our collective congratulations from our institution, CII, as well as from all the industry for such a great budget presented just a few days back. We all noted the focus on growth, the focus on a very forward-looking budget. Many of us have pointed out the positive features that were most welcomed by the industry. I would like to specifically highlight one thing which we have all, warmly welcomed. That was the piece where we saw the continuity on the simplification of the tax reforms. Always been if I can say, one hallmark, one big area that we have seen as a takeaway from the government has been the work done on the taxation front from the days of the GST being unfolded. We see today a very strong and a healthy buoyancy in the tax in the past decade. That's an outcome of the many good work that has gone behind by this phenomenal team, and our congratulations to the Finance Ministry officials led by the Revenue Secretary, the Chairman of the CBDT, and the Chairman of the CBIC for this wonderful work. I would also like to mention a few other points which, one of the things that we have noted is the collaboration and the ability to give time to industry by the officials to understand and interact before we get into the budget, before we see the budget. Many of our feedback were listened to, it was taken in, we had smaller meetings, we had larger consultations, and we found many of our proposals being reflected in a manner in which the government deemed appropriate, but many of our suggestions taking shape in some format when the budget was presented, be it the employment focus through the ELI or the consensus on the next generation reforms, which was also very well articulated. We saw the focus on capex, if I might say, while we could have said that we could have argued that it could have been X amount and Y amount, but I think there has been a very strong capex-led focus in the budget. We talked about fiscal consolidation and growth, that balance we saw. We saw many important features. So I just wanted to point that out because this interaction also helps us sometimes in understanding that some of the demands that we make to the government are not always justified, and that's also explained to us very well. So that exercise is indeed of great value. So we do also wanted to place on record the way we looked at the announcement of the Honorable Finance Minister when she spoke about the review of the Income Tax Act 1961 in the next 6 months or so. That was indeed a very strong statement, and I'd like to appeal to this senior-most team of the Ministry of Finance that if there is a role that we could play from CII as you work towards that, we would wish to understand from you as to how we could contribute to that exercise. The other point is, I spoke about the fiscal glide path and remaining fiscally prudent. That was a huge area that we have been always concerned about, but we have always seen the government, in fact, doing better than what they keep as far as in the glide path is concerned. And we do believe that that will crowd in strong investment. And for doing that also, we see role of the industry, a strong role of the industry, and your inputs, your advice in that partnership would be of great value to us. We had spoken thirdly on the social sectors, which covers both the human development areas, which has been so very well adequate. We covered in the budget, education, skills, MSME, the participation of women in the labor force. All of them have received priority, as we have seen in the budget. Again, we see a strong role for us for our industry members, and I'm sure there would be many further policy announcements in this regard to see how we can bolster this partnership. Another point which I just wanted to flag, and I will really appreciate the government's effort on that, but we know that industry has many views on it, has been how do we look at rationalization of our import tariffs while we reduce the cost of manufacturing, which definitely will manufacturing and make us globally competitive. And our suggestion has been that the government could strategize a roadmap to shift the duty slabs to competitive levels over a period of time. It could be 3 years, and with a 3-tier duty structure with some carve-outs, of course, so that we can also protect our domestic industry. So there also, there is a role I think we can play together, and we would seek your advice and guidance for understanding as to how do we develop consensus between industry and see what's really going to be beneficial for the Indian consumer and industries. The last point just I wanted to mention was we were extremely happy that it was announced in the budget that there would be further simplification of GST and rationalization of the structure. That and that covers many other sectors which aren't. This would indeed be one of the most important features of. May I start by requesting the CBDT chairman, Mr. Ravi Agarwal, to make some opening remarks, please.
Shri Sanjay Malhotra, Revenue Secretary, Mr. Chandrajit Banerjee. Well, someone asked me that what was the theme of the proposals, direct tax proposals in the budget, and if I can say that the theme was simplification, standardization, making it easy to comply, ease of doing business, decriminalization, trying to understand business dynamics and encourage business. Wherever there were concerns, trying to address those concerns, bring more investment. So this was the basic theme. Now, towards achieving these targets, these objectives, number of steps have been taken. There is a full analysis of union budget which is on the table, so I would not delve into that because that analysis has been done in the last about 2 days. But I would just like to flag some points which are, as I consider, are some of the salient features of the budget insofar as the direct tax proposals are concerned. One, of course, is the new tax regime wherein we have tried to bring more value for different sections of taxpayers, be it salary taxpayers by way of standard deduction increase, or even for private salary, raising the NPS contributions and deductions thereof from 10% to 14%. Then there is a standardization wherein the capital gains tax regime has been standardized to a great extent. And if we do that, there's a lot of talk about it, lot of discussions about it. But if we see in totality, one, the benefit is standardization and simplification. Categorizing of assets, broad categories, different categorizations, we have done away with that. Holding periods, we have again standardized. And in most of the cases, the standardization in capital tax, keeping in view the ground realities, the property rates that have gone up, if we talk about specific asset, that would be beneficial. The benefit of rollover, of course, is there. So broadly, if one sees, and if he sees in the context of the property that the person is holding, I think in most of the cases one will find that the capital tax regime that has been now proposed is beneficial. And going forward, it is definitely beneficial because an asset taken today, if it is disposed of few years down the line with reduced tax, the tax liability is definitely less than the current tax regime. Then on procedure side also, the provisions have been largely streamlined. In the context, we all know that while reopening of the cases, there were multiple proceedings, multiple litigations were going on, and that was perhaps not leading us anywhere, because as an industry, you were actually also engaged in the litigation. Time is precious, both for the industry as well as for the department. The resources are also precious. So with that thought in mind, the procedures have been standardized. Even in the search cases also, substantial standardization and simplification of the processes have been proposed in the bill. The other is decriminalization. So we understand that you are a taxpayer, but at the same time you are partner in the tax administration, because you are deducting TDS, which is a very important component, and that way you are basically an extended arm of the department when you are taking this, doing this exercise. And therefore, small hiccups here and there that ought to be ignored and not subject to prosecution. So with that spirit, the decriminalization of TDS provisions have been done. And I can share with you that the data that we get from the industry, from the business, come up with the VSVS scheme, wherein we understand that yes, there are a lot of cases which are stuck up in litigation, and therefore, keeping in view the fact that the last VSVS was also successful, this is yet another opportunity that we can actually end disputes, resolve disputes, and move forward. Mr. Chandrajit Banerjee mentioned that in the exercise of reviewing the Act, if there is a role of the industry, then you would like to participate. I would say that there is nothing like a if. There is a role of the industry, because you are the people who are actually, interpreting and implementing, I would say, the Act on the ground. And therefore, your feedback is important. Together, you and us together can give to the nation a good piece of legislation, which is during the review, if we do this exercise intensely, then perhaps to the country we can give this. So I would suggest and request that the feedback and the engagement can be close, can be good, with the intent that at the end of 6 months, if we come up with a document that is easy for us, for the taxpayers to comprehend, to understand. So with that spirit, we'll move ahead. On digitization front, we have done a lot, And I can share with you that the next cycles of the projects in digitization and putting in place online services, that is also on. And therefore, your ask basically would also be relevant while we are actually shaping up these projects, because going forward, these projects would be there with us for the next 5 to 7 years, and your you see requirements, your expectations would also help us in building up good systems. So the mantra should be that it is not you and me, it is basically us, and together we can actually work towards a better tax administration where both the stakeholders understand each other and work in the right spirit. The department, the flavor of the department has changed from a largely enforcement directorate department to a largely taxpayer-centric department, with taxpayer services being the focus. In most of the cases, 99.9% online services and online facilities and all those things. And we will keep the same spirit and move ahead in the direction. And the union budget with the direct tax proposals is basically a step forward in that. It's heartening that it is being welcomed, the proposals are being welcomed, and that encourages us also. As a professional, that encourages us. And we would work together to further take forward this initiative. Thank you.
Thank you, Chairman CBDT, Mr. Agarwal. Thanks for focusing on the theme, expanding on it, and really for your words on partnership and how you encourage this two-way dialogue, plus also the phenomenal efforts being taken towards simplification, decriminalization, compliance reduction, and of course the standards. Thank you very much. So with that, may I move to Mr. Sanjay Agarwal, the chairman of the CBIC, for his opening comments and remarks, please.
Revenue Secretary Shri Sanjay Malhotra ji, Shri Rajiv Memani ji, President Designate CII, my colleague from CBDT, Chairman CBDT, Shri Ravi Agrawal ji, Shri Charanjit Banerjee ji, DG CII, ladies and gentlemen. A very good afternoon to everyone, and it is truly a privilege for me for attending this interactive session on Budget 2024 organized by CII. I am also deeply grateful for this opportunity to address such a gathering of tax experts, industry, and thought leaders. The union budget is more than a financial statement. It represents a vision of our nation's economic future. It serves as a roadmap guiding us toward growth, development, and prosperity. This document reflects our priorities, addresses our challenges, and sets the stage for achieving our collective aspirations. The government's goal is into a developed nation by 2047. And viewing the budget through this lens, particularly regarding indirect taxes, the background appears clear: simplified taxation and rationalized rates. Such measures will definitely enhance supply chains and ensure that our industries in India, which is essential for manufacturing goods in sectors like electronics, renewable energy, defense, and space programs. In the case of products for which we have substantial domestic manufacturing capacity, significant duty reductions have not been considered, and understandably so. This ensures that our local capacity continues to thrive without undue external pressures. And in support of our export-oriented industries, such as marine produce exporting industry, the rates on inputs have been lowered to enhance their competitiveness in international markets. Therefore, the BCD on prawn and shrimp feed and fish feed has been reduced. Further, the BCD, because there is some production capacity for the feed within India, so therefore, our inputs for use in India is benefited from this budget proposals. Furthermore, the goods where the benefit is available under free trade agreements and substantial part of the demand of such items is met through imports. The duty rates have been adjusted to diversify supply chains and reduce dependency on any single source. In certain cases, as I mentioned earlier, that where there is influx of very cheap imports, certain corrective actions have been taken, like in case of flax banners and ammonium nitrate. The duty rates have been raised to ensure level playing field for the domestic producers. Also, the duty inversions have been corrected wherever possible, like in case of MDI, which is a main input for production of spandex yarn. There was a duty inversion which has been now corrected. Another important aspect which I would like to mention is the success story of phase manufacturing program in the manufacturing of mobile phones. There the rate of duty has been reduced from 20% to 15%, and this rate of duty was increased in 2020 to encourage setting up of the ecosystem within the country and deepen the value chain. That objective has now been achieved, and we have seen continuous reduction in imports of the major components and assemblies for mobile phones. I can give you an example of PCBA, which carries a value of 55% in the total cost of mobile phone. There the imports are continuously going down, whereas the domestic production is going up. And in last year, financial year, the production of mobile phones in the country was to the tune of 4.1 lakh crores. And exports are also rising. A substantial part of this domestic production is going in exports also. And the last financial year, the exports were to the tune of 1.2 lakh crores. So that shows that phase manufacturing program, which sets a duty structure and which was calibrated in such a manner that as the value chain deepens, we make the correction in duty, has really borne fruit. And we have a robust manufacturing of mobiles within the country. And therefore, the time has come to reduce the rate of duty from 20% to 15%, because these duties which are increased for certain purpose cannot remain at very high level forever. Also, as a social measure, the BCD has been fully exempted on 3 cancer drugs. I would also like to mention about the gold, which is of interest to various groups, which carries interest in investors, manufacturers in the gems and jewelry sector, common man, and including the smuggling syndicates. As you would be aware that duty on gold was raised in July 2022, when the country was witnessing worsening current account deficit because of the rising crude petroleum oil prices in international market. And therefore, to curb the imports of non-essential imports, rate of duty on gold was increased from 10.5% to 15%. That was again. And we have also noticed that certain practices start setting in where the gold started coming in other forms also other than bullion form, which were entitled for duty concessions under the free trade agreements. And we also noticed that there were increase in gold smuggling, which was evident from the huge number of seizures which have been made by the Customs Department and DRI. In fact, in the last financial year, the gold seizures were to the tune of 4.9 tons. And therefore, there was a need for duty correction. And we received the representation from gems and jewelry sector also, because gold is the main input for manufacturing gold jewelry, and the high rate of duty was increasing the cost of this essential raw material and blocking the capital which is required for procuring of this input and manufacturing and converting into jewelry. So this move will definitely help the gems and jewelry sector in more domestic production as well as in exports. And this sector contributes immensely for providing employment and increase in our GDP and exports. Now coming to the GST side, we are expecting a robust growth of 11% in GST revenues as per our budgetary estimates. And in the first quarter, the gross GST revenue collections have gone to the level of rupees 5.57 lakh crores, indicating an increase of 10.1%. And we are confident because in the later quarters, the collection is more. So we are confident that target will be achieved. And another important feature which I would like to highlight, that the GST gross collections has outperformed the nominal GDP growth in last financial year. So there is a good tax buoyancy, and that will continue because GST has inherent efficiencies and the compliance levels are going up continuously. And for this, I would like to express my gratitude to the taxpayers on behalf of the tax administration for the better compliance of the GST law. The proposed GST amendments in the finance bill are on the basis of the recommendation of the GST Council in their meeting, especially in the meeting which was held in the month of June. And these were aiming to simplify compliance and provide relief to taxpayers, especially in MSME sectors, where certain lapses happened in the initial years of implementation of GST inadvertently. And I would like to refer certain such measures which have been introduced in the finance bill. One of that feature or amendment which is being carried out in section 107 and 112, that is related to the pre-deposit which is required at the time of filing first and second stage appeal. That has now been rationalized, reduced, and earlier it used to be 10% with maximum of 50 crores, and on second stage appeal 20% and maximum of 100 crores. So that has now been brought to 10% and maximum of 40 crores, 20 crores for CGST, 20 crores for SGST for first stage appeal, and for second stage appeal also it is now 10% with maximum of 40 crores. And this change will ease cash flow and alleviate working capital constraints for businesses. A new section 11A is being introduced to grant powers for waiving recovery of duties which are not levied or short levied due to general practice, and this will facilitate regularization. Earlier in GST Council meeting, when such issues were considered in certain times, it was on as-is basis. Now a legal framework is being provided, but this provision has to be used very sparingly, and because this is an exception, not a norm. I would also like to refer to section 128A, which is now being amended to provide amnesty to GST taxpayers, because this provides for conditional waiver of interest or penalty or both in respect of demands which are raised under Section 73, provided the taxpayer pay the full amount which is demanded in the notice by the specified date. And this is intended for the fiscal years 17-18, 18-19 and 19-20. In addition to that, a retrospective amendment from 1st July 2017 has been made in Section 16(4), which has two limbs. One is that it is providing for taking ITC in case revocation or cancellation of registration happens. Then if return is filed within 30 days, the ITC which is available is allowed. It will not get time barred as per the provision of 16(4). Second is that if the return for initial years 17-18 to 2021 is, in such cases, the invoices and debit notes, the interest will be available up to 30th November 2021. And this will provide significant relief to the taxpayers who missed availing the ITC. One feature I would like to especially mention is the introduction of optional facility of filing GSTR 1A. This was a long-standing demand of the trade that there should be some facility to amend GSTR 1. That is now being provided as an optional facility. They can amend GSTR 1 details by filing GSTR 1A before filing of GSTR 3B. And this will reduce discrepancies and reduce the litigation which is arising out of difference between GSTR 1 and GSTR 3B value. And to combat fake registration, biometric based Aadhaar authentication is being extended across India in phased manner. Similarly, in case of ECO, they are, as per law, mandated to deduct 1% TCS. That is now being reduced to 0.5%, and this will ease the financial burden on the suppliers who are making the supplies through ECUs. Similarly, many more clarifications have been issued on the recommendation of GST Council, which may be related to rate of duty, interpretational issues on ITC, and several other such issues. I would also like to mention that in my post-budget interactions, I have been frequently confronted with the question that what lies ahead. In response, I can share that will place significant emphasis on rate rationalization, and this is aligned with the Honorable Finance Minister's remark in her budget speech, where she announced a comprehensive review of the rate structure to be conducted over the next 6 months. The objective is to rationalize and simplify the rate structure to facilitate ease of trade, address duty inversion, and reduce disputes. Suggestions in this regard from the trade and industry would be welcome. Additionally, there will be a concentrated effort to deepen digitalization, although most of the processes on custom side as well as on GST side are already automated, but whatever are the remaining process on custom side especially will take care that these are digitalized so that trade is facilitated and it will be easier to carry out the work through the online processes. And by embracing advanced digital solutions, we aim to enhance efficiency, transparency, and ease of doing business in our trade ecosystem. I look forward to the insightful discussions of today and the valuable feedback which will be received from all of you. Department greatly values the inputs and suggestions from the trade community. We are committed to addressing your concerns and simplifying the procedures to ensure a more conducive environment for businesses to thrive and contribute to nation's economic prosperity. Once again, I extend my gratitude to CII for organizing this session And thanks to all of you for patient hearing. Thank you.
Thank you, Mr. Agarwal. Thank you for your very detailed responses, which of many anticipated questions, if I may say, on many of the issues that you spoke about. Thank you very much, and it's now my pleasure to request and invite our honorable chief guest, Sri Sanjay Malhotra ji, the Revenue Secretary, for his remarks and address, please.
Thank you for all the kind words. Thank you for the warm reception. Mr. Memani, Mr. Banerjee from the CII, my colleagues, Mr. Sanjay Agarwal, Mr. Ravi Agarwal on the dais, ladies and gentlemen, and members of the press. Indeed, very happy to be here amongst all of you from the industry and from the tax practitioners field. This is really a useful opportunity for us to not only speak about some of the things that we have tried to do in the budget, but also at the same time to take feedback from you, suggestions from you as to how we can further implement now the budget proposals and further improve the environment, the tax environment especially in our country. I really don't have much to say because my earlier speakers have given you, the focus, the theme, the principles, the policies, on the basis of which we have designed this budget. Suffice to say that the primary and the only focus, in fact, the only focus really, has been on the taxpayers. So whether, it is the taxpayers from the industry, whether it is the taxpayers from the trade, whether it is the personal income tax payers, insofar as our revenue proposals especially are concerned. And you would have noted that most of the part B of the budget really covered areas which would have proposals which would have benefited the industry, the trade, and the common man who's paying the taxes. Very, very few proposals really, for generation of revenue, augmenting of revenues. Yes, few proposals, yes, you can say in the annexure, a few proposals where we try to rationalize and take some anti-avoidance measures, but other than, few proposals which you can say, are in the nature of, say, STT or, something in capital gains. Other than these two proposals, maybe to some extent you can say buyback tax, in the hands of that's more, to do with equity. It's more to do with the principles of, equity rather than, being a tax proposal after having made dividend taxable in the hands of the shareholder from hands of the company. It was more, for reasons of fairness and equity rather than, it being a revenue proposal. So other than that, the whole theme you would have seen, and that has been the continuous endeavor. It is not only, that this budget in that sense is any different. The last few budgets, the last few years, I would say, starting with, say, the GST, which was huge reform in indirect taxes, and followed by the simpler regime for corporate taxes, the 22% regime for corporate taxes without exemptions and deductions, personal income tax regime, without deductions and exemptions. It's all, about simplification. It's all with the taxpayer really, in mind. And secondly, how, while we reduce compliance burden, while we simplify things, rationalize, make it easier for them to interpret and implement, also how do we make them, more competitive? So whether the indirect tax proposals, reducing custom duties on a variety of inputs for various labor-intensive sectors like marine industry, for example, or leather and textiles, or electronics, or the jewelry sector are concerned. Or, there are these direct taxes proposals where angel tax was removed. And so that reminds me, I prepared a list before coming here because CII had given us, a very big, thick, very well, documented, booklet containing their proposals. And I'm happy, to report to you all, members of the trade of this esteemed organization, that a number of them, find in some way or some form, as also acknowledged by Shri Banerjee in the budget speech. So angel taxes one, business trusts, you wanted certain things. Maybe, we may not have done it, exactly the way, you wanted, but the very fact, that those were considered, is an acknowledgement that, we value this kind of interaction that we are having, with you, either before the budget or after the budget, or even, during the year. Dispute settlement is a big, big issue. Mr. Ravi Agarwal, has thrown light on it. Number of steps that, we did last budget. Some of them bore fruit. Some of them are still, in the pipeline. It's really, a matter of great concern for us, especially, on the direct taxes side. Some, also on the indirect taxes side. So that's why, we came up again, with this Vivad Se Vishwas scheme. 2 monetary limits, we have increased. We plan to deploy, more commissioners, etc. So TDS simplification, timely, a lot of, implementation related things, not policy things, timely order giving effect, rectification, very small things, they do not really, require any change in the law. So I'm happy, that a lot of these things have found way in this. And going back, to angel tax and some of the things that we did to promote entrepreneurship, innovation, and employment generation. I mean, angel tax, being one of them, customs duty reductions proposals being another, proposals, for shipping lines, proposals for the diamond industry. Those are very, very small steps. I would concede, that they are very small steps. But please also note that they may be small, but the thought process behind that is very, very big. Because these are not, the general rules. So if a safe harbor is being thought of for the diamond industry, or a presumptive taxation is being thought of for the international shipping lines operating domestic cruises, these are not rules. These are not, the rules of the game really. These are really exceptions to the rule. So while, they may appear to be very, very small measures that we are taking, but the thought behind that really is big, and that is, that the government is actually willing to go out of its, comfort zone, and willing to, think laterally and go out of the rule books really to support and promote wherever there is a need for the industry. So primarily, insofar as the industry is concerned, these were the 2 main, focus areas for us. And so, again, with these words, I would just like to thank you all for the tremendous cooperation that you people have given to us, not only during the budget exercise, but even outside the budget exercise. And we continue to collaborate with you, as mentioned by the chairperson. CBDT also, the comprehensive review, exercise is going to begin now, and of the Income Tax Act. We look forward to your suggestions in all areas of work. Very pertinently, very rightly, he pointed out, and I would like to echo his sentiments over here, is that this is actually a team effort. It is not, you and me, as he said. It is a collaboration. It is a team effort. You are our partners. What he said. I fully endorse what he said, lest it be felt that this is a view which is shared only at the board level, but this is a view which is shared right at the government and at the very highest levels, that we see you as partners. We have an approach of collaboration, not of confrontation, and we move forward to make India strong with that sentiment. Thank you very much.
Thank you very much, Revenue Secretary. One thing which came out very strongly as you spoke was this entire, if I may use the word trust, and you really talked about how we could build trust between the industry and the government in various ways through which you really talked about. I would want to turn it over to Rajiv Vemani for carrying forward a conversation, including the audience. But before I do, if I may, put two questions which come to mind, which we have been talking about since the budget. Has been one larger issue is on how do we really, how does the government look at increasing the tax net, just about 2.2% or thereabout, of working age population which are paying taxes cannot be probably enough to be a sustainable model if we want a good tax to GDP ratio or the tax to GDP ratio to grow. So how can we again work together to deal with this? To see how we can increase these numbers and which would make things much more sustainable. The other point which has been really being talked about a lot since the budget has been, we have talked prior to the budget about the simplification and rationalization of capital gains tax, and we've seen that in many ways in the budget speech. But one of the issues which has been there has been the removal of the indexation in the long-term capital gains tax, and that really has a strong effect on the real estate sector. And many of our companies who are corporate members of CII, their employees, people in the middle class down the line, many of them even have small two properties, more than one, and that needs to be perhaps at times liquidated because of need and requirement that comes up, and that really creates a heavy impact. So that's been some discussion on that amongst our membership since budget, and I just wanted to keep these 2 points because one is a thought which has been coming from within the institution, and second one which has been coming from across our membership. I'll pause there and turn it around to Rajiv Vemani, not just who has been leading our tax and economic work within the institution, but now is the president designate of the CII. Rajiv, could you carry forward the discussion, please?
Yes, please.
So let me try to respond. Both of them are, the first one at least is a very difficult question. How do we increase really the tax base? There are no simple solutions for that. But let me also at the same time assure you that while we do need to improve and enhance our tax base, our tax to GDP, given the level of our development, is actually not so low. The tax to GDP, when you take into account the state taxes, Government of India is about 11.7, 11.8%, 12%, let us say, another 6% is state, so it's about 18%. And given the level of development, because it has been empirically demonstrated that it is also could be also a function of the income levels in various countries. And so if you plot it with respect to, the income levels or per capita incomes of various countries, then we are slightly above, what that per capita income should actually indicate. So we are not doing poorly. How do we increase the tax base? One, of course, as India develops and as our tax to GDP has been going up, our tax base has been going up, and it has been going up, more or less, I would say, at the same rate as the growth of our economy. So one, of course, it has to do with the development of our economy. The second, of course, more importantly, is the formalization of our economy. So as it formalizes, more and more people will find it difficult to stay outside the tax base or the tax net. So I only have these two observations in this regard to make. But coming to your second question on indexation and simplification of capital gains, and we have been talking about it now for the last 2-3 days, ever since the budget speech, ever since the FN made the budget speech in the House or the Parliament, and which also to some extent, to a great extent, my colleague Mr. Ravi Agarwal also threw light on. It's basically as I also mentioned, it is primarily a simplification exercise. I mean, you people, when I was seeing what your recommendation was, you people wanted 2 rates, and we have given you 1 rate effectively. So we have given you more than what you wanted. So it is primarily an exercise to make it simpler. It's an exercise also in same same light. It's an exercise to remove the tax arbitrage between various asset classes, be it financial or non-financial assets. And thirdly, to a lesser degree, it is an attempt to reduce the difference in taxation between capital gains and other forms of income, which include your salary income, which include your business income, which gets taxed at up to 39%, or even your rental income. So a small minor reduction in that gap. But primarily it is these three considerations that were weighing in our mind to make it simple and reduce and remove the tax arbitrage. And while you will ask your questions, I will ask you one question before and I don't expect an answer, but allow me also to ask you one question in this regard. So I have asked this question to other people in the trade, those people who have been interviewing me. They may not be here today, but so they come. So I ask them, well, okay, if you bought a share, let us say, Mr. Memani, let us say, buys a share for say 30 lakh rupees, sells it for 70 lakh rupees, and he gets 40 lakh rupees long term. And Mr. Chandrajit Banerjee, on the other hand, he buys a house and sells it for 70 lakh rupees. He ends up both of them end up getting 40 lakh rupees. And in case he was shifting a house, which he is not, but if he was shifting a house, he buys another house, there is no tax. It could be within the same city or it could be, in a different town. There is no taxation there, but he does not have to buy another house. He just keeps that money over a period of say 5, 6, 7, 8 years. Same period, same, money. Should the taxes between the two be different? So this is the question I asked them. Both of them have an additional 40 lakh rupees. And so some people may say they have not, but I thought to myself, some people may say, well, we need to promote, the housing industry. And I saw, there were some reports saying, that the housing industry will be negatively impacted. So as I have said, we give due thought and consideration to whatever suggestions come up. So I looked up, the Nifty reality. And to my surprise, I saw that one day it went down. Immediately after the budget, it did go down. And Mr. Sorry, I forgot your name, from Kredai, Ganeshji is sitting here. It went down one day. After that, it has recovered. And it is more or less in the region of 1090. Between 1080 to 1090 is the Nifty reality. So even that has not happened. So we can now, I have asked my question. We can have, other questions now from the audience.
Thank you. Thank you. Rajiv, we'll moderate it just a
Sir,
moment.
firstly, sir, thank you very much. Let me add my compliments. What Sanjay has said and what everyone has said. I think the stability in the tax regime, the thought behind the budget, the various efforts made to simplify, and I've been part of the tax committee that set up that was part of the direct tax code formation in 2019. And I can only tell you, I know how challenging it is to make the smallest of changes. So I can imagine what you would have gone through to take the angel tax out, and my compliments to you, sir, for doing that. I do want to, before I put forward the questions to the audience, I do want to say a couple of things. On the tax to GDP ratio, you're absolutely right, sir. We did an analysis. And India stands pretty high. We have to look at tax to GDP ratio vis-a-vis the per capita income, because it changes dramatically without that. On capital gains, to further reinforce your point, what I would say, I have comments on both ways. One is, if I was to compare our long-term capital gains tax rate with most of the other countries, I think we compare very favorably. The second thing is, in the last 1 year, and what has been proposed by various governments in the next 2 years, in terms of capital gains tax, unrealized gains tax, various forms of wealth tax, inheritance tax, I think what I would say is what you have done is really very, very liberal, given the appreciation that we have seen in the capital markets. And also what we have seen in other category of assets. When you're selling a business, the earlier tax rate was 20%, it's now come to 12.5%. Rationalization for REITs and InvITs has been a big benefit. For housing also, I think it's a big benefit. So I would say overall, sir, this is a very, very beneficial change. I think over a period of time, maybe in a year or two, people will fully realize and grasp the advantage of that. The only caveat I would want to put to your example, sir, which you used about myself and Mr. Banerjee, that all of us are also prisoners of history. We also live with perceptions. So when Mr. Banerjee bought the house and when he was selling the house, his perception was that, since my inflation in the asset has been less than 6 times, 7 times over a period of last 20 years, I may not be able to pay tax. Let me put a different example, sir. If I also bought a house and if my inflation was 15 times over a period of last 20 years, I would be a very happy man with this provision. But Mr. Banerjee, as he always does, doesn't make the most judicious financial decisions. His appreciation was only 5 times. And the poor man first got poor because he made the bad decision. Now in the new legislation, he has to end up paying more taxes. So, sir, so I know, so my only request, sir, is therefore, it is a very positive, for a period of time, maybe 1 year or so, especially on this, and since it's such an emotive issue, and I've done a sample check of this, I think 80-90% of the people will actually benefit from this. Maybe there are 5 to 10% of the people who bought at the wrong end of the cycle will probably not benefit from this. If for 1 year, if you can put a saying that people, whatever is the greater benefit, I think it will reduce the noise. Maybe it will increase your revenue also, because it may force some people to transact in the short term. But by and large, it will not move the needle. It will reduce the noise much more. So I'll leave that with you. I know probably what your immediate reaction will be, but I'll leave that with you. And before I open it up to questions, I just had one question on partnership TDS, and that's been introduced. And obviously, I think it's the right thing to do. But I think just in terms of partnerships, the way the income from partnership works is that if a partnership earns 100 rupees, 60 on 60, and if they pay 60 rupees of out of that, 60% of the profit of the is available for deduction, which means that 60% of the profits, first 60% of the profits are taxed in the hands of the partner. The balance 40% is actually exempt in the hands of the partner, because it is a deduction. It is not allowed as a deduction to the partnership firm. So in effect, the partnership firm ends up paying taxes on that. So when you put a withholding tax of 10%, sir, the only challenge is that part of that income was not taxable in the hands of the partner. It was actually taxable in the hands of partnership. And the way our TDS refund function works, sir, it will be a nightmare claiming that refund. So I understand the intent. I think the only thing is practicality of this. If you could just see those, so that after 1 year, 12 months, 18 months, there is no accumulation. The second thing is, partnership generally carries on an income from business and profession, and the way the income is distributed is part of it, and generally a lower part of it is fixed, and a lot of it is variable, because it is distributed at the end of the year based on what the profits the partnership makes, and then how the distribution of that happens. So sometimes you may have the income distribution maybe 3 to 4 months after the financial year has ended. And again, there will be mismatches because of that, and there will be TDS cases that will arise on that, or people will start taxing drawings and things like that. So there is a practicality. I think the benefit gained probably, in my view, is not that high. But even if you want to do that, I think if you can make some amendments which capture this, I think that will be very helpful. If you're okay, sir, can I open it up for questions? Yes, and maybe you want to...
No, you give us your suggestions, your specific suggestions with regard to it. The purpose really, you understand the intent and behind, this legislative change. So as long as you people are comfortable with the intent, and it is only, procedural things that need to be sorted out. Please, let us know what changes you are recommending, so that it has the desired impact without causing much of a bother of refund, etc. To the partnership firms.
My name is Dr. Subhash Goyal. I'm from the CII Tourism Expert Committee. Firstly, it's an excellent budget, sir, taking view of the MSMEs and the sector. But tourism, which is the largest employment generator in the world, and the Prime Minister's vision, he always talks about tourism, has been completely ignored. There are 2-3 suggestions which I would like you to consider in the larger national interest. One is, we earn a lot of foreign exchange, and we create the largest number of jobs. 1 out of every 9 jobs that are going to be created will be in this industry. So we should be treated as par with the export industry. In fact, the Ministry of Commerce used to give us SEIS, Services Export Incentive Scheme. That has been withdrawn. So it has been a big deterrent, because we are the soldiers, like you are supporting defense. We are the soldiers who walk the streets of the world, promoting tourism. And we need, and even the MD assistance, the Ministry of Tourism allocation that you have reduced from 100 crores to 30 crores, that needs to be increased, because we are the ones who can create the jobs. With artificial intelligence and computerization, jobs are going down in the industry. We are the only labor intensive industry. If you want to eradicate poverty from this country and Vision 2047 of the Prime Minister, then I think you have no other choice but to support the tourism industry, which is dying. And lastly, I would like to just mention TCS on outbound tours is helping the overseas tour operators and travel agents, and the Indian tour operator and travel agent is getting eliminated. So these 3 points are there, and I hope if you want, we can on behalf of CII Tourism Committee send you a representation also. This needs to be considered, and there is something on the cruise tourism which my friend.
Can I just say if we can just follow a sequence, otherwise everyone will raise their this thing. Can I request Ms. Preeti Chadda, Chief Financial Officer, K. Raheja Corp, is she here? Yeah.
Good afternoon, sir. Firstly, I thank you for having reduced the holding period for long-term capital gain for REITs and InvITs to 12 months from 36 months. This will surely help improve liquidity in these instruments. So there was one request from the REIT InvIT participants to consider inclusion of business trust in section 112A to enable fund of funds and ETFs to invest in these instruments. Today we don't have ETFs and fund of funds investing because we don't come in the 90% threshold. And if in the 10% threshold, if they include REITs and InvITs and if that gets breached, then they lose the 12.5% capital gain tax. So that was one request which we had made, and I would request you if you can consider that, because that will go a long way in bringing liquidity to these instruments, which is actually a challenge today.
Fund of funds, not mutual funds, fund of
Fund
funds.
of funds who in turn invest in EOFs.
Please
So
give a detailed, fund of funds, those, who spend 90% of the funds in 90% of,
Yes, sir.
of funds,
EOF,
right?
yeah. And the EOFs have to invest 90% in either equity or equity oriented, and business trusts do not fall under either.
That
Those-
is for SEBI to make those amendments, I would suppose.
So SEBI has to change the mutual fund regulation, but even if they change, section 112A
That's
also
true.
will need a change.
We'll also need a check.
Okay. Thank you,
We'll
sir.
keep that in mind.
Yeah.
Thank you very much. Ms. Anand Shalini, Chief Financial Officer, Cabin Care.
Good afternoon, sir. Thanks to CII for this opportunity. Very happy on the emphasis being given on simplifications and taxpayers, addressing taxpayers' concerns as emphasis on the in the budget. I have two questions, both around simplification and from concerns from the industry. One, when GST came, the concept was greatly around one nation, one tax, and one administration. But there are few companies like ours which operate pan-India, and we still have to go through assessments and audits in different states. It would be good if it is a centralized administration, centralized audit or assessment, which can help us in compliances much more efficiently. That is one. And second, around HS and classifications, especially where certain clarifications are given by the council, and there are contradictory decisions taken by high courts on the merits of the SSE's standpoint. So it would be good if certain guidelines come from the department so that there is ease of business in this angle, especially the recent decision on flavored milk, where the Madras High Court had decided on flavored milk to be coming under Chapter 22 rather than, to come under 402 rather than 22. So those are certain things where classification issues or disputes are there. If they can be addressed, it would be helpful.
Yeah, so, GST, let's understand that it is actually, 30 states. It is actually 30 taxes, right? While, the law is the same, our endeavor is that there is one unified tax administration in the form of one tax authority that you are allotted to either the center or the state, but you have multiple registrations in each of the states, isn't it? That is because it is actually 30 taxes. So we have actually, with the introduction of GST, we have made a remarkable transformative journey. A big leap we have taken by reducing the number of, this 30 could have been 30 into some 7, 8. So we have reduced it to 30. How do we now reduce from 30 to 1? Right, is the question. I mean, this is a question which we have in our mind, which, like it bothers you, it bothers us also. My request to you is that we need a collab for this. We need a collaborative approach with all the states. So how do we do it? My request will be that you also do some advocacy. You also talk to various stakeholders, to the states, etc. We'll also do that. It cannot be an immediate or a short-term solution. This will happen over a period of time. We need to keep speaking about it. We need to keep trying to do this. But as I mentioned, it is a difficult task. Your HSN classification, flavored milk, I think we have gone in appeal. There are views on it. Those are specific issues. Let's not get into a specific issue. But our endeavor here in the GST Council is that we have one view. We may not agree with the High Court, but at least all our states and the centers, our advance rulings, all of them have one view. And that has been the approach. So if you have any such issues where different formations are taking different views, please come to us, please approach us. We have one view on this, on flavored milk. It is not that we have multiple views on it. And if there are clarifications to be issued, we can issue them. You want to? I think Mr. Garg is not here. I wanted to respond to him. If he's coming back, I'll respond. Otherwise, we'll do it later. Yeah.
Sir, also I would say what in section 11A, the modification that you've introduced, at least some big issues, past issues can get addressed there. And also if you can improve the power of mediation or something to resolve some big industry-wide issues, I think that will at least bring some of the...
The whole purpose of 11A is this only, that wherever, as a practice, especially, in the initial years,
Right.
Because of lack of understanding, doubts, ambiguity, confusion, etc. The issues were there, to resolve them, and we have been doing it.
Yeah.
Wherever, we have been doing it. It's not, when this section was not there, we were not doing it. We were regularizing various things on as-is basis. We have already done it. To my mind, there are not many such issues which are not in our knowledge.
Yeah.
Let me put it like that. But, please let us know. Please engage with us. Please write to us. What are those issues? And we will try to resolve them, whether through the GST Council or, outside within the framework of 11A, etc.
Thank you, sir. I'm just trying to cover a cross-section of industry. Therefore, if you can, from JSW Steel, Mr. Vineet Agarwal. I don't know if
Good afternoon, sir. I'm just taking the cue from there. So now tribunals are in formation under GST, but as you told that, yes, department has one view, but at times the various advanced ruling authorities of different states are taking different views in respect of even one single assessee in respect of multiple registrations. So is there any view of the council and the
Please let us know. Please let us know
that
wherever
having
are
a
these
single
issues.
authority to decide on them.
Please let us know where are those issues.
Yeah.
Which issue are you referring to?
So there have been some issues, sir. I'll note them down.
Please let us know.
So if there is appellate authority or something,
most of these issues, GST Council se upar, there is no other authority. Once because they are the lawmaking body, right?
Yes.
So if the GST Council issues a clarification through an amendment in the law or in the rule or in the notification, I mean that is final, all right? Unless it goes to the court, etc., which we don't want it to happen. We want it to be settled, within our house, that is, the taxpayers and the tax authorities. So most of these issues are listed with us. We are aware of the issue that she raised on flavored milk, Madras High Court.
about advanced ruling or multiple advanced rulings, sir.
Please let us know if there are issues relating to advanced rulings, etc. We will take them up.
Sure. Thanks.
Yeah. Mr. D.D. Goel is there from Maruti?
Good afternoon, sir. First, thank you very much for bringing a lot of clarification in last GST council. We have two suggestions, sir. One is on the 17.5, still lot of input credit is restricted by law, particularly like factory building or the vehicles. So like in income tax, whatever the business related expenditure are allowed, if input credit can be expanded. That's one request in our pre-budget. There was a request, we'll repeat that one. And another is on the TDS and TCS. As sir, any company with more than 10 crores turnover on sale and purchase transaction, today there are two simultaneous provision, 194Q and 206C. If purchaser has deducted, okay, otherwise seller has to collect TCS. So request if can be unified and made only one, TDS on all sale and purchase transaction, so that this administrative difficulty of ascertaining each transaction whether buyer has deducted 194Q, that exercise can be saved. Thank you.
Thank you.
On this 17.5, what I will say is there is some merit in what you are claiming, that some input tax credit should be given. But I'll go back to what Mr. Memani said. That there is, if you try to rationalize it, there will be some gains, because ultimately there is a lakh of crore of rupees involved in it. Out of the 20 lakh crores, 5%, it is more than 1 lakh crore. That is kind of blocked under 17.5. Now, if I do that, then some people will have to bear the burden. And those people, may not like it. So there is a history. The point, question he made, there is a history. It is kind of settled. You are bearing it today. Let that history remain.
Okay. So Ashok Sehgal from MSME segment. Thank you for devoting so much of the budget to schemes for the MSMEs. I understand that there were about 72 times the speech was interrupted by applause. I'm sure 50 of them were for the schemes announced for MSMEs. So all the schemes you've announced are excellent, and we hope that will enable MSMEs to move forward. One of the things you have mentioned today is something which we in MSMEs always worried about. The policies are good, the intent is good, but at the implementation stage, it doesn't trickle down to actually benefit in the way in which it is intended. For example, many of let's talk about the training or any other subsidy which the government is offering. It is our experience that many times when we apply under that scheme, the sanction also happens, but the actual disbursement of the money to the party which has incurred that expense can take 2 or 3 years. For example, if we participate in international exhibition, the EPC and MSME ministry gives subsidy, there are claims which are pending for 2 or 3 years before the money comes in. Now, as you know, MSME's biggest problem always is cash flows and liquidity. This is something which contributes to that. And I think as we go into this training and the subsidies we've announced there, my request is that mechanism should be set up to ensure that that actually flows down and is disbursed in a good and quick manner. So that's one. Since you raised so many points on MSMEs, allow me another 1 or 2 points. You have also mentioned about GST errors and how you want to be practical on errors which are committed. Now, I think at the moment there are 2 issues in this. One is that please be more kind to issues where you have mentioned, but we are not seeing it on the ground, is that if somebody voluntarily comes forward to make the principal payment, he is still being asked to pay the penalty and the interest on it. Now, that should be considered sympathetically, considering the ongoing and the historical confusion on GST payments, particularly in the first 3 or 4 or 5 years. It's settling down, but that should be taken sympathetically and differentiated between an intent to defraud and an inadvertent error. So that may be taken and considered more sympathetically. Another thing is specifically from a category I'm sure you would like to encourage, which is the exporters. Many companies which are largely dependent on exports end up with a credit balance in their GST account. And yet that is neither available to them as cash, nor is it something on which they're earning interest. If you look at income tax, if you have a positive credit balance, you earn certain interest on it until it is paid back to you. So something similar may be introduced under the GST credit balance, which is sitting to the credit of the industry.
Others also have to
Sure.
ask questions. So if Mr. Sehgal, can I request? There are lots of pending
Right.
questions.
So I think just one last point on, again, related to capital gains. On residential property, if one reinvests, then one gets exemption from the capital gains tax. This should be also extended to industrial property. So if an industry outgrows and invests in other larger industrial property, that should not be subject to
Already
capital
there.
gains tax.
That is
Thank
already
you.
there.
I see.
If you
I think it was only to
sell an
residential
agricultural
property.
land, buy an agricultural land, no tax. If you have a factory and industrial this thing, you sell it, you buy another.
Right.
That
I was
exemption
under
is
the
there, and
impression
similar
that-
exemption is there for houses.
I knew it was for residential houses. So
no,
thank you
it
for the
is there.
clarification.
It is there.
Thank you, sir.
Mrs.
I am S.C. Kapoor from the Association of Synthetic Fiber Industry. I've got two questions, one on GST and the other on the customs duty. Sir, in case of customs duty, you talked about history, or GST about history. Now, historically, the difference between the yarns and fibers and the fabric was 5 percentage points. In order to plug the imports of fabric from China, the government of India raised the duty on the fabric from 10% to 20%. Rightly so. But the yarns and fibers were not were left out. So the difference between the yarns and fibers, instead of the 5 percentage points, bloated to 15 percentage points. Consequently, the imports of yarns and fibers from China have gone up. Actually, the problem is with China. China has got huge surplus capacities which are dumped in the rest of the world. So we had made a simple request that the man-made fibers, we are not talking of you create 5% difference, should be taken up from 5% to 10%. But it has not been addressed, this issue has been hanging over. In case if the capex from the private sector is hardly any capex coming. So in the man-made fiber sector, we would like to invest provided our capacities are utilized at a higher level. In the polyester sector, which is 90% of the MMFs, and the mainstay in the fabric industry, is there's hardly anything. You know, China has about 25 million tons of polyester.
That point is well understood.
The other is on GST.
I'll request.
Can we do later?
GST.
We have another session, which is a detailed session. You can please.
I'll request you, to get this request forwarded to us
I'll do.
through the Ministry of Textiles. I'm not sure whether this request came to us.
It comes with the Ministry of Textiles as
Okay.
well as the chemicals and fertilizers.
Okay, fine.
The on stage is chemicals and fertilizers and the textiles.
Okay, there is another technical session after this, so quite a few people from the department will be there, so you can ask your questions. Yeah, I know. Yeah.
Let's have last two questions because
And then
then
we can wrap up. Yeah.
we can wrap up then,
Yeah.
and you have your other sessions, and we also have some other
I can imagine,
engagements.
sir.
Thank
You've
you.
been very busy. Thank you and very good. Ms. Ruchi Kukreja, and then we can. Then sir, after that you, and then if you can keep it very brief. I think we have already overextended the welcome.
I understand. I'll quickly do it. So my name is Ruchi Kukreja, and I'm General Secretary for Indian Primary Copper Producer Association. And we are really thankful to you for this appreciative move, considering copper is a critical metal. And I think with that move, you have met broadly the themes of the budget. And considering now the efforts will be from both the sides, from the industry side and the government side, to promote this industry, because the requirement of this metal will keep on increasing as the time move ahead. But I would request government to consider a few more products which are still coming under imports from China at throwaway prices, and which will be used in the upcoming applications like electric vehicles, renewable, solar, greener energy. And industry want to actually invest in those business, but there is a problem in actually conceiving the idea as well, because there is no way we can compete with China in a way. So yes, I would say that from the concentrate point of view, it's a very good effort and very appreciative of the move. Now if we move downstream and invest in the value added products, there would be little more effort needed, and we would request that government should support the industry, and we can work together to make India dependent on ourselves rather than make in India for the world.
Sure. I think we reduced duties, blister copper and copper scrap. Copper scrap continued at 2.5%. Continued.
Sir, we are thankful to CII for having put in all our requests in that booklet which is gone. And I must say, sir, most of them have been taken care of for whole steel industry, particularly the raw material issue. And we thank Sir Yogi for that. The ferrous scrap, vanadium, everything else. So one small request which is outstanding is on the export. Steel exports have been good quite for some time, but of the last 2-3 years it has been not only less, but even the rod tap scheme, which has been brought in place of another scheme, has not been extended to Chapter 72. I think the line ministry, steel ministry, commerce, they are all in favor. Whether it is the possibility of funds or whatever reasons, I think it's a pending issue. If that can be pushed. And second one, sir, is a very small issue, and that is on the decarbonization of the metal industry. I think that is going to be flagged as an issue for incentivization besides greening efforts in the future. Thank you.
Thank you very much. We have really overextended. As he's on his way out, maybe you can ask the question, sir. On behalf of everyone present here, on behalf of CII, let me thank you. I know this is an extremely busy time for you, and you must be doing 4 or 5 sessions like this almost every day. So thank you so much for your patience and also for answering a lot of the questions. And once again, thank you for an excellent and a very consistent, stable
On
budget.
behalf of the government and all my colleagues, thank you, all of you,
thank you
for a patient hearing. It's been a pleasure interacting with you, and we'll try to see what more needs to be done. Thank you.
Thank you very much. Thank you.
Where is the fourth mic?
To kindly remain seated. So our speakers for the next session are already there at the venue. So we'll right away start the next session. Request everyone to kindly remain seated. Thank you. पीछे पीछे है क्या? इसके पीछे कुछ नोटपैड वगैरह का पेन चाहिए नहीं वो कहाँ है अरे पॉइंटर कहाँ है मेरा देखिए पर देखो तो ईशा Request everyone to kindly reconvene. We will now be starting our next session on the indirect tax discussions. May I now request our speakers for the session, Mr. Vivek Ranjan, Member Tax Policy and Legal, Dr. Sanjay Mangal, Principal Commissioner GST Policy Wing, and Mr. Anupam Prakash, Joint Secretary Customs, to kindly join us on the dais. I would request Mr. Uday Pimprekar, Chairman CII Core Group on Indirect Taxes, and tax partner EY India to kindly come and steer the discussions.
Should we start? So since we are running grossly out of time, I'm going to hasten this. And I think a lot of us have gone through the fine print, and so everybody understands the proposals quite well. So what we'll try and focus on is primarily areas of engagement with the policymakers, since we have them. We have about 25-30 minutes to kind of close this out. So I'm going to, and so bear with me, and if there are questions, please raise it. We want to take up the customs proposals first. So if there are any questions on that, we can take it up first. I'm not going to go through the proposals right now while we had a presentation, but we don't have the time for that. Just one, question broadly, or rather a comment from the CII side I wanted to kind of ask. The Honorable Finance Minister announced that there is going to be a comprehensive review of rates that is being proposed over the next 6 months. And these rates, there was a comprehensive review of exemptions that were done earlier. And pursuant to that, almost about 400-500 exemptions have been kind of revised, put in place, changes have happened, and so on and so forth. And that is actually helped. Now the next phase is being done is actually looking at the comprehensive review of the rates, primarily for removal of duty inversion, dispute settlements, or ease of trade, so to speak. From a CII perspective, I wanted to ask a question to Mr. Ranjan as to how can the CII how can the CII engage with you all in this particular exercise of the review of the rates? We obviously, on a periodic basis, come to you on suggestions and ask. So, can you possibly come?
Yeah, good afternoon. Just to give you a brief background, exemptions have been reviewed since time immemorial, and I'm using that term because I was in TRU from 94 till 99. So review of every single exemption is part of the budget exercise. So it was done even this time. Only difference that has been made in last few years is that Section 25 of Customs Act, which deals with exemption, has now a clause, sunset clause for conditional exemption, that it will have a life of 2 years unless it is extended or it is allowed to lapse. This budget also we have about 27 exemptions. They have been allowed to lapse, but they were, some of them were effective up to end of September, so they will lapse as and when their tenure comes to an end. The announcement that Honorable FM has made in the budget speech is bigger than that. It's a comprehensive review which includes tax rate structure which are applicable, and as well as all the exemptions. And obviously 6 months timeline has been given, so the indication is that it will be taken up as part of the next budget. So to answer to his question, we will be inviting suggestions from all the associations, about 120 associations that TRU deals with as part of normal budget exercise, and we'll take all that on board while undertaking this exercise. But results we will see in the next budget of that review.
On the customs end, there was one question that has come to me, that for lab chemicals classified under 9802, the duty rates have been increased to 140%. Okay, 150%. Sorry. I mean, obviously, this is a big impact on drug discovery business in pharma. I mean, can we kind of have a relook at it, reconsider the reasons for it?
Okay.
If there are any other follow-up questions on the same, maybe on the same issue? Yeah.
I think I can stand and speak. I know. Hello. Yeah. So hi, good afternoon, everybody, and we have our colleagues also, and probably if we can reframe the question a little bit more in this aspect. And as we have seen Honorable Finance Minister speaking about giving more push and impetus to the R&D ecosystem of the country through various schemes like the ANRF and DOP's PRIP schemes and DST's Industry Academia Linkages schemes. So we are talking about how we can move forward in the R&D ecosystem in India. And that actually requires a lot of push in terms of discovery research, which happens in the pharmaceutical sector, which happens in the chemical sector, which happens not only in the companies or industries, it happens in the government ecosystem as well, where a lot of labs of NIPERs, a lot of labs of CSIR and DSTs are, Department of Biotechnologies are involved in it. So such a move of taking the BCD from 10% to 150%, which not only impacts the lab chemicals, it actually impacts the ecosystem of the R&D at a large scale, where actually the R&D becomes expensive, and we were doing some back-end calculations, which increases to 140% as on today. So which means that if a NIPER has to come out to government to get funding support for getting a discovery R&D research, if they can do it 100 rupees today, tomorrow it becomes 140 rupees. So are we as a country looking forward to progress the research and development? We know that we are looking for more viable options which we can do domestication here in India through certain high quality chemicals. But what we foresee is that is yet to come over a period of 7 to 8 years, where we need more quality materials, more skill empowerment here in the country. Till the time, how we can actually transition to that phase, we cannot afford our R&D to, lag behind from where we are moving forward. So it is probably a kind of honest confession from the entire R&D ecosystem, and not only from the industry, but also from the academia. I don't think that academia is here to see that how we can discuss with ourselves, create a kind of alternate options to see that how we as a country towards R&D and innovation can grow together.
Yeah, good afternoon. So just to give you the background of this change, some importers started misusing this exemption. Only condition for this is it's a broad banded entry in the tariff. Normally goods, organic, inorganic chemicals are classified in chapter 28 to 29, which have hundreds of entries. So 98021 creates a specific entry where classification is just one, no matter what lab chemical, organic, inorganic you import. So it's basically a facility towards assessment. There was a lower rate also. So some people started misusing this exemption and started importing ethyl alcohol in huge quantity. The requirement under 9802 is only that it should be in a small packages of 500 ml or 500 grams. So all these importers, they were importing ethyl alcohol in 500 gram or less than 500 ml package. So there was an organized misuse of this exemption, and that led to review of this. So that's the background. As far as rate is concerned, the goods can be, these lab chemicals can be imported if it is organic, I think chapter 29, inorganic chapter 28, and lower rates of I think 7.5% generally applies. So it is not as if rates have gone up. You have a lower rate available, but the facility of assessment is not available as of now. But suggestions have been received. It will be examined as we go along.
So we would like to propose that if we can meet the department, maybe with an ecosystem, to give you a holistic 360-degree view of how we look at it and what can be the proposed alternatives to take it forward, so that we do it together as in partnership, if that's okay.
You're welcome. You are welcome, and also suggestion can come from the administrative ministry. So there is not an issue. It's only an enabling provision which could be done only as part of the budget. Raising rates, you need to raise the rate in the tariff. That cannot be done outside the budget. There are emergency powers, one can do it, but since the problem was brought to our light a few months back, budget was around the corner, so we did it. So, I mean, if there is a representation, we'll definitely have a look at it.
And also there is one more additional request, is that till the time such a representation is presented and discussed, we would request if there can be a defrayment of this particular item, so that we come to a common consensus, because it is
No, as I told you, chapter 28, 29 already has less than 10% rate.
Okay.
So one can, you have to specifically name the chemical and import under that. So you can use that. I don't think rates have gone up, unless if there are some cases, you can bring it to our notice. But yes, please make a representation, comprehensive one, it will be examined.
Thank you very much.
This representation should come from Ministry of Chemical Fertilizer
No,
Department or directly?
typically the process that we follow, it should come from association, not. So that's
what-
part one. If it comes through administrative ministry, it is better.
Thank you, sir.
Any other question on customs? Yeah.
So my name is Sanjay Basu. I'm part of the National Tourism Committee of CII, and I'm also the chair of the Cruise Adventure Eco and Sustainability Tourism Subcommittee. Thank you for the exemption that's been given for foreign cruise liners to bring their cruise ships and operate in Indian waters, touching the domestic ports and the domestic sectors. However, there is also a nascent domestic cruise industry. And this puts us at a disadvantage where for us to scale up, if we were to bring foreign cruise ships into India and to operate in the Indian waters, be it the rivers or be it the seas, we do not get that exemption. And we would like to request, as a homegrown industry, and I've been one of the pioneers of that since the 1990s, we would really like to see that the homegrown industry is given as much, if not greater, benefit in expanding that sector. Because we are the people who actually broke the ground, and then the foreign companies came. Now they get the advantage, we would not. So that would be something that would be
as a matter of policy, you would like to encourage domestic sector over foreign sector. So please make a representation. I mean, depending upon who comes at any given point in time, his request is examined and heard. So that may have led to some, kind of disparity in treatment. Please do make a representation. We'll have it examined.
Thank you very much.
Okay. Any other questions on the custom side? I think. So do you want to kind of talk about, any of the customs proposals yourself?
No, I can. If you want, I can give a brief overview of the customs exemption. That I can do quickly. So the budget has basically 7 or 8, highlights, so to say, as far as customs duty proposals are concerned. I'll just quickly go through each one of them. The first and perhaps the most important has been reduction of customs duty or BCD on precious metals, which include gold, silver, and platinum. Gold duties have been cut drastically from 15% to 6%, platinum from 15.4 to 6.4, and so on. The idea is to encourage domestic value addition. Then the next sector, in fact, there are 2 sectors where we have taken, in a sense, whole of government approach. One is critical minerals and another is fisheries. In critical minerals, you would have seen in the budget speech that government has launched National Critical Mineral Mission. As part of that, on customs side, we have reduced BCD or exempted BCD, in fact, on 25 critical minerals and intermediates, which includes oxides and stuff like that, to nil. On 2 critical minerals which have some domestic availability, that is natural graphite and silicon dioxide and quartz, it has been reduced to 2.5%. And on 2, again, because of domestic concerns, titanium and calcium phosphates, we have not changed. So on 25 critical minerals and their oxides and so on, we have completely exempted BCD. I think if I can explain the background, in terms of sourcing, there is a huge concentration. Graphite, for example, is 80% mined, and these critical minerals are used in EVs, renewable energy, and battery storage. So graphite, China has 80% production, cobalt, Congo 70%, rare earth, China again 60%, and lithium, Australia has 55%. So not much can be done as far as production is concerned, but the idea of the mission is to actually encourage refining, processing, and downstream industry in these critical missions. And with a view to that, we have made those changes. Fisheries, again, the budget talks of blue revolution, as they call it, and as a part of that, lot of financing, concessions have been announced in the budget. As far as custom duty is concerned, we have reduced duty on brute stocks from 10 or 15% to 5%. As far as inputs for the manufacture of aquatic feed is concerned, they have been completely exempted. So these are two important sectors. There are changes in IT and electronics. For example, custom duty structure on mobile sector has been rationalized. As against 7 duty that used to happen 5 or 6 months back, we now have a spread of 4 duties. In shipping and MRO sector, I think sometimes back we issued a notification on customs side equalizing or charging only 5% duty across chapters on components or raw materials which come. Now we have exempted components and consumables. Earlier only raw material and inputs were exempted. So that is there. As far as health sector is concerned, 3 cancer drugs names you can find, they have been exempted. Capital goods again, capital goods required for petroleum exploration, there was already an exemption, we have expanded the list. And similarly, capital goods for manufacture of solar cells, modules, they have again been exempted. So broadly, these are the changes, highlights from the budget on customs side.
Thank you. Thank you. I know you have to leave. Thanks. Thank you, sir. Okay. So I'll come to GST. So I can also leave because the customs issue are not there. But are there any customs kind of questions again on the rates or any other thing for that matter? Yes.
Maybe I could just add to what I was mentioning. Even on adventure equipments, there are a lot of equipments that are not manufactured in India. Be it river rafting, hang gliding, mountaineering equipment, and so on and so forth. And as that is not available, and that's an essential component for promoting adventure tourism to remote parts of the country, which uplifts economies in remote areas which are not yet developed. That could be also something that could be considered along with the cruise component which has been considered. Thank you.
Yes, the suggestion is well taken. You can make representation, so we can examine it. Okay. No, so GST, I mean, that's okay.
My name is Gurmeet Singh. I represent Federation of Safety Glass. There are about 250 members who make toughened glass. And the BIS QC order came in April 2023. And in spite of that order, material has been coming in from China, from companies which do not have the BIS certification. So we approached the customs at Dadri that, these consignments are coming in. So what they told us that it's difficult to physically check. So we said that is secondary. First you should at least check whether they have the license. They don't even have the license, and it's available on the BIS website, the companies which have a license. So this is one major problem because most of the companies in this are under MSME. And cheap substandard material is coming and eating into our business. So that's a very serious matter, and it's about 1 year, but we haven't got any major relief.
Okay, so this is not particularly for budget issue, but yes, generally I understand. So once there are 2 types of BIS implementation at any time at the port of import. The foreign manufacturer, he can be certified by BIS, and the products from his factory can come to India. Second is product itself is BIS standard. It has to be followed as per the national treatment. So manufacturer is also following same standard as well as the imported goods. You are saying a particular product which was not following that standard was getting imported into India. So maybe the implementation is based on the particular customs tariff head. Against that customs tariff head, you have BIS standard mapped into our system. What happens whenever the imported consignment comes, there is a risk treatment given to that particular item number declared in the bill of entry. So if that particular item is covered with BIS and we have in our repository that particular BIS requirement,
because we have from almost all the agencies, all the partner government agencies, more than around 500 compliance requirements. So we have those requirements in our repository. Whenever import is coming, those particular CTH where BIS standard is required, they are intervened. In your case, you are indicating it was not so, but kindly give us details. We'll get it checked and the issue can be addressed.
So may I have the privilege of sending a representation to you?
Yes, yes. You can always meet me in ministry and give me representation.
Wonderful. Thank you so much, sir.
Thank
you.
Okay, we're running out of time, and we'll quickly go on the GST proposal. So I'm not going through the proposal, people would have looked at it. Yeah, thanks a lot, sir. Thank you. Thank you. Okay, so on 128A, I'm just straight away going to come to questions that we have received. The first question is that, thanks a lot. I think it's a good move to kind of settle disputes. Would adjustment of pre-deposit and under-pay protest payments being made, would those be adjusted when we are trying to make the entire kind of duty payment, okay, for the notice? Can those be adjusted against whatever the duty payment is? To my mind, yes, but that question came, so.
Yeah, good afternoon, everybody. Section 128A is mentioning, like when you have seen the wording, that he has paid the due tax liability. So any amount which is paid towards pre-deposit or which is paid during investigation, under protest or otherwise, that will be considered as part of duty. And that will be considered part of tax, and it will be considered as fulfillment of liability to that extent.
Okay. The second, which is a kind of a nuanced bit, but almost the same thing. So, the situation where the tax has been paid entirely, okay, and only the interest and penalties have not been paid, and a lot of people have done that. And because the tax has been paid, perhaps they have not received for the interest and penalty, they would have received the show cause, or they have not yet received the show cause for at least part of that period. Assuming that the show cause has been received for only the interest and penalty, would those interest and penalty be waived if they have made that entire payment of tax? And the reason came in because of the way the wording is.
No, the wording of the notification, wording of the section is that where the demands have been issued under section 73.
Yeah.
For these particular years.
Yeah.
So the time limit for issuance of demand for these financial years is already over.
Yeah.
So it is not that some new demand is going to come for those financial years. So the demands have already been issued. Only those are going to be considered. If there are any demand which are under section 74, that's are not going to be covered.
Right.
However, if later on, it is being also provided in the section, however, later on, if the adjudicating authority or appellate authority or courts decide that this was not a case of section 74, it was a case of section 73, then the benefit will be available.
Yeah. But if people have made the entire payment upfront earlier, and only interest and penalty is, show cause notice is only for interest or penalty, then in those cases, those things.
If the show cause notice is under section 73.
Yeah, if it's under 73. Fine. The third question that has come is a part settlement of an entire notice covered under 128A?
No. The wordings are very clear. It says full tax liability. Yeah. So if somebody wants to, if there are 2 or 3 issues in the show cause notice, somebody wants to accept only one issue and does not want to accept other 2 issues, they should follow the procedure of adjudication, appeal, or whatever it is. They are not covered under that under the said section.
The next question that came up was that, there is a show cause notice right now today. Obviously, we have time till March 25. Okay, a lot of people will want to kind of go about getting the show cause notice adjudicated, so that the demands that are kind of raised are slightly more aligned with kind of reality. So possibly they'll get an order through the period, maybe till March 25 or
whatever extended period, or whatever date that you guys notify. So the final order before March 25, if we kind of apply, that particular order can be taken as the base for full payment of, to determining full payment of notice.
Yeah, whatever is the final order which is available, whether this is the adjudication order or whether this is the appellate order, whatever demand is confirmed in that final order, which is presently available, which is available till 31st March, before he is making that application, because there will be some procedure.
Yeah.
So the procedure will be given in the rules.
Yeah.
So whatever is the, at the time of applying, if whatever is the final demand as per the order or the notice or the appellate order, that will be the tax liability amount.
One suggestion we had was that this requires a withdrawal of appeals and writ petitions, right? Where maybe a provisional okay can be given before the withdrawal of, these writ petitions or appeals for this particular, for being eligible for this, going under 128A. That would be helpful. The worry is that if you are bound to withdraw before the approval under 128A comes, then there is a bit of uncertainty that creeps in this overall kind of scheme that we have. So one suggestion that has come is that maybe in the procedure that you define, you allow a provisional withdrawal, okay? Provisional acceptance, basis which with the withdrawal come and the final acceptance can kind of then come of the waiver.
We can examine it, but this particular scheme which is being, which has been planned through this section, it is considered to be very simple scheme. There are hardly any chance of different interpretations. So there is no such clause that where investigations are pending or where investigations are not pending. It is very simple scheme. Demand should be under 73, and whatever is the final confirmed amount, full tax liability has to be paid. It is not optional like part payment or full payment. So wherever full tax liability is paid, then interest and penalty can be waived. So there are, though a person will very easily know whether he is covered under the said scheme or not and apply, but your suggestion we will note. You can also send separately regarding that. We will keep that in consideration.
Sure. There is a request that we need to kind of hasten this. So we'll pick it up later. I just want to go to the other, bit. Okay, there was an amendment that you've made by inserting 71A. Okay, on summons and authorized representatives being kind of. Do you want to just explain the ambit of that? Because I think, this has been a cause of a great concern in the last 12, 18 months. So can you just kind of define what do you, let's say if a CFO, just to be specific, CFO or a CU is summoned specifically, he can grant this to kind of some authorized representative to go and appear in relation to a summons?
The provision basically is an enabling provision to allow the officer to mention in the summon that whether the person has to appear in person or he can appear through an authorized representative. So the issue was that the present wording of section 70 did not provide for representation through an authorized representative at all. So this was a legal issue which Ministry of Law and Justice felt that because our provision does not provide for representation through an authorized representative in response to a summon. So if we amend our summon format to include representation by an authorized representative, that will be against the provisions of the law. So to enable that, so that the authorized officer can mention in the summon whether the person has to appear in person or he can appear through an authorized representative. And whatever like someone mentioned, if someone mentions it is to the person has to appear in person, then he has to appear in person himself. Or if he can be, if it is in general in nature that he can either present himself or through an authorized representative, then an authorized representative can come in place of the named person. So it is that. It is to clarify or to provide an enabling provision for that in the Act.
Okay, we will, I guess we will get other questions, Mr. Mangal, and come over one of the days to kind of get.
Yeah,
I'm sure
definitely.
there are.
Whatever you could come down.
Thanks a lot. I mean, I know we extended our stay quite a bit. But so, thanks.
Thank you. Thank you.
We will now, please be seated. We will now start with a discussion on the direct taxes. We have the senior official from Ministry of Finance, CBDT, to come in for interaction. So just give us a minute or so. Okay. So may I request Mr. Ganeshan Raj from ENY, Mr. Raman Chopra, Joint Secretary CBDT, Mr. Pankaj Jindal, Joint Secretary CBDT, to please be seated.
Thank you so much. I won't take more than 10 minutes. Oh, absolutely. That is the promise. What is that? PPT.
You would have saved it.
No, anyway, just PPT or 26 is So, sir, I think before they set up, just wanted to start off.
Yeah, sure.
No. So, first of all, I think before you came, the Revenue Secretary and the panel was of the consensus that in income tax, everything was based on the clarification, simplification, standardization. That is very quite evident, because I was trying to dig some of the issues, but I couldn't find much. Whatever I found is not on any policy issue, more from a drafting, because there seems to be disconnect in few areas between the explanatory memorandum and the finance bill, so which I shall sort of point it out. The first one, of course, before this comes up, is on the clause 11, which is what you said on the residential house property.
Yes.
Some people seems to be reporting as business income, and that is not the correct, which is very true. But only one issue which was that there are some houses which are being used as to let out for guest houses, hotels, paying guests and all those things. And probably since they are engaged in that activity, they may not be reporting as house property, but as a business profession and all. So if at all you feel, I don't know which are the cases you got, explanatory memorandum says it has come to our knowledge, but if those cases are not those one, probably a clarity would be better, otherwise then dispute will start, because all along they must be showing it as business house property, because they are engaged in that activity. Second issue is on 50AA on the specific. No problem, sir. Yeah, now they have come. Really. The second issue is on the 50AA, the new definition of specified mutual funds. I won't go. I mean, what you have changed is absolutely correct, except that the whole clarity was to be given to the gold mutual funds and gold ETF as a new definition under specified mutual fund. The amendment seems to suggest that it is effective from assessment year 26-27.
Yes.
All we are just saying is that there will be one difficulty for 1 year, which is assessment year 25-26. Yes. So our only humble request is, so that another confusion should not happen for 1 year, having clarified, make it retrospective from 24-25 onwards, unless and until there are some compelling reasons which we are not aware of. That was the only thing on that. The next is, of course, 2-3 of them are on the capital gains. Again, not a policy. Since now there is a standardization both on rates and period. The first one is that Section 50B, which deals with the lump sum sale, there probably it needs slum sale, sorry, which needs to be changed, because that also treats this as a long-term capital gains. So probably if you can just change the period from there on that. That was the first issue. Second issue on capital gain is, of course, we all know that the whole issue which is being debated is on the indexation.
Yes.
So in that only one couple of suggestions are there. One, of course, we said that why can't we have an option the way it was there earlier in 112 in first proviso, that either you pay with indexation 20% or without indexation 12.5. If you feel that no, enough of enough, we want to come clean. The only other request which is not documented here, today the current reference price is year is 2001. If you can make it 2011 or 12 or whatever it is, at least there will be a soft landing.
Absolutely.
All that is the only request which was there. The next one, of course, I won't press because there seems to be a different distinction being trying to drawn between listed debenture and bonds and unlisted. I'm sure there is some policy intent, so I won't press. I thought that if there are no policy intent, if you can do it. Moving to the employer giving credit of the TCS against the salary TDS, which you have done it perfectly right, except while you see the finance bill drafting, it says provided that this subsection shall not in any case have an effect of reducing the tax deductible. Obviously, once the TDS credit is given, the salary TDS will go down. But the finance bill somehow, I think the drafting, there seems to be some mistake in the first line. That is one. And second thing which is not documented here, sir, is that whenever the employees who have received stock options of the overseas company, for exercises purposes, they have to send the money. And the second situation is when the IT companies send people abroad, they are there for 3-4 years and they have to pay tax abroad. That is not given effect to against the salary TDS. It is not written here. That's the second situation which I am mentioning. So if you can also consider, since we are allowing this, otherwise they have to independently file return and claim credit on.
Salaried, I think it is okay, but we'll check it again.
Yes.
This salaried thing, I think it is okay, but we'll check it up again.
First, not to be reduced.
But the last line, I think the last line makes it clear, but I'll check it up.
Yeah, please, if you can, because
not deductible on the salary.
Having raised here, we don't want any dispute with that, and
Not
particularly
not
with the employer,
Absolutely.
because they will go very conservative if things are not very clear.
And tax deducted and collected. And
Correct.
It will not have the effect of reducing
The
total
next,
tax.
the next one is on the salary or TDS newly provision on partnership firms LLP. Issue is not the questioning of the 10% imposition on salary commission and all, but there is some practical difficulty in imposing it. And the main issue essentially is that at the year end, partnership LLL firm, they decide what should be the sort of profit pool, salary and other remuneration. During the course of year, all the partners, whatever they draw, that goes into the drawing. So it may be impossible to determine every month and to file every quarter a return of disclosing how much TDS which has been done. And this happens after the finalization of accounts, maybe in June, July. So the whole impossibility of compliance, the way partnership firm and LP structures is, there is limited issue here. So one can sort of consider. And number two, I guess there is no policy intent other than that to get the data in detail of all the partners who are being paid what amount and all. So now today most of the PANs are linked with the Aadhaar. So one of the suggestion in the next page we have given that two suggestions we have given, one to roll back, and other one is if the key intent is the information, you can disallow it under 40B, whichever, wherever you do not find a Aadhaar linked PAN. So that will achieve your objective. Anyway, because today 40B does not have this condition, if you impose that condition also, it is taken care actually. The next one is advance ruling. We have been waiting it for the last 2 years after it transitioned to bar. Now, the way it has come, and we have made several representations, sir, you will recall, is that people, whether admitted or not admitted, are waiting for the last 6 years. Now, all those people want to come out and just pay their normal tax and just close the litigation and just get out. The way it is drafted, it appears to give very clearly that those who were admitted under the erstwhile regime of AR are not allowed to withdraw. Then they are stuck totally. And that is what I feel should be clarified, so that anybody whoever wants, whether admitted or not admitted under the older regime, can certainly do. Anyway, for the new one under the bar, people who are filed, they will continue. So this is very important, otherwise another 1 year we have to wait, because it was hotly debated and it said only through amendment this can happen, not by circular or notification. Now if it's not done, then...
How many such cases would be?
Sir, we will not know. Of course, the department will know. But the question here is that issue is not, even if it is 1 or 2 cases, we cannot make a class distinction between 2 sets of people, which is a voluntary act which I opted to go to here. It is not like an assessment where notice is issued and I have to respond to it. Now I should not get stuck. Already I am stuck for last 6 years. It should not continue like this. And also for government, it is a revenue raising, because once I come out, I am going to pay tax and interest, and I am going to continue with it. So the government also is going to get revenue. Whether 1 case or 20 cases, government is going to do it. And department is ready for it.
Only issue here was that once it has been admitted under 2, then the AR carries on its proceedings and might have reached near finality. It might have reached near finality in respect. You cannot differentiate between cases. Some cases have not been heard, some cases have been heard, and AR is going to pronounce its orders maybe 3 days from now. Suppose that is the position. In that case, the person comes at, no, I want to withdraw because you are going to take a negative decision in my case, or you're going to treat this transaction as taxable. So how do I differentiate from the authority's point of view that this is not being driven by a prospective negative decision which is just about to come?
Correct.
So that...
I will clarify that immediately.
Sure.
One, of course, you can ask the new members of the bar.
Yeah.
Number 2, none of the cases which have been admitted by the erstwhile AR during 17, 18 and 19 have not at all been taken up for hearing. Forget nearing, not at all been taken up for hearing.
Fair enough.
Yes, so you can confirm this through the new members also.
Another issue that will arise here is that if that order has been passed for allowance, it has been admitted, so the AR, earlier AR would have given some judgment on merits. The final decision is yet to come, but even at the stage of allowance, it must have made some observations.
No, the way the procedure was, whether this application had been admitted under AR, nothing on merits.
Nothing on merits.
Nothing, because if there is a tax evasion case...
No, that is okay, but my point is that sometimes the AR qualifies that.
No, nothing. It was only tax evasion cases, they started this procedure, saying if it is a clear case of tax evasion, we will not admit or entertain. Nothing on
they have
merits.
rejected, that is a separate thing.
Yeah.
But where they have allowed, if there is any qualified observation, then those cases they have to be individually.
That used to be a 2-liner. You can find out also from them, and I can also give. All I am just saying is we have waited for 6 years, and also the government is at loss, because those people are ready to pay tax. This is one thing which is the very good thing which you have done on the 276B on the prosecution. And the only thing is that we wanted a parity between TDS and TCS. What you have done for TDS, same parity which you have always carried on between TDS and TCS. Similar relief if it can be.
There is some difference between deductors, the profile of deductors and the profile of collectors. So there is a ground for no distinction between TDS.
I leave it to you.
But then this will
I just thought about the external point of view. The last one is on the Black Money Act, which you have said that a lot of suggestions, the memorandum says suggestions have come and you have increased the limit from 5 lakhs to 20 lakhs for non-levy of penalty in case of non-disclosure of foreign assets. All we are saying is that the same thing should also be done for prosecution. Otherwise, it will look very incongruous that penalty is not levied but you are proceeding on prosecution. Again, subject to the same limit of 20 lakhs. That is the last thing which I have. Those were my thing. Anybody has any question on income tax? Yes, please.
Firstly, thank you so much for abolishing the angel tax. I'm sure it's going to enhance investments in the IT sector. One proposal that went through from our side for the IT sector was with respect to the safe harbor regime for routine software development and other IT-enabled services. In today's date, there's that margin of 17% up to 200 crores of international transactions. So first thing, the 17% margin in itself seems to be slightly on the higher side. It was reduced, I think, way back in 2017. But if we do the analysis, I think the ideal margin level comes out to 12%. That had gone through as a proposal. And number two is the eligibility in itself. The eligibility of 200 crores actually leaves out a lot of GCCs. And with the way GCC sector is growing in India, I think if the eligibility can be increased, then of course it's going to enhance the sectoral growth of GCC as well. So those were two suggestions that had gone through. Yeah. Thank you.
Anybody? Yes. They have to leave. In 2 minutes. Last question.
Yeah, sir, we must compliment all the efforts of the administrative machinery. So I'm coming straight to the point of research and development. While we opt for the lower tax regime, 22%, and all the exemptions, deductions, they go away, fair point. But considering the competitiveness of the industry, not one industry or two, quite a lot of industries are there. And on the global landscape, how can we fortify our position with a lot of R&D effort, which is in any case required? You have been comparing all the nations with India. And for that matter, this 35(2)(ab), for example, in the lower tax regime, that is not there, section 35 is not there, and quite a lot of things are not there. So would you like to contemplate a kind of a thought in your mechanism, thinking cap, if you wear that, how can we, from tax administrative standpoint, how can we support the industry? Maybe earlier that used to be 200%, 175, 150%, whatever it is. It was a great swap. But how can particularly the private industry, which is interested to do fabulous research and support the economic effort, Atmanirbhar Bharat and all that, how will the government support us in that regard? Any industry, I'm not confining myself to one tire industry or anything.
I'll answer it in one line.
Sir.
We are the wrong ministry to seek for benefits related to R&D.
How do we go about, sir?
You go to MIT, you go to science and technology, you go to agriculture. The government is promoting direct benefit type of schemes. That where you are actually spending something on research and development, government will help you subsidize that research and development. Don't use an indirect method of tax subsidy for the purpose of research and development, because the reason for that is that we do not get to know whether research and development has actually happened. We are not that authority.
Sure.
So you have to integrate yourself with the ministry, who's your line ministry. Doing research in coherence with the ministry helps in achieving that research and development.
Okay, and seek direct allocation of the budget.
Direct allocation from the budget.
Okay, many thanks. Thanks.
Thank you so much.
Thank you.
Thank you so much, sir.
Sorry you had to rush.
Thank you. Sorry for sort of getting delayed.
Thank you, everyone. We have a high tea available. Please do join us for a high tea and a tea. Thank you very much for joining.